In today's topic, we're going to talk about reversal patterns and how to catch these reversals. Now, there are two types of reversal patterns. The first one being the stop hunt reversal pattern. And so the way that it is formed is that price comes to an institutional level, which could be edited really from an old liquidity pool or any of the PDRAs that you have. Create a short-term high and create a low. Then you have a run on that short-term high there. So run on that liquidity, and then the breaking market structure, that short-term low that was created is what confirms the reversal. So the next thing that price will do is to trace back inside the range to a premium and then sell off from there. Then the second reversal pattern is the failure swing. The failure swing, price comes to an institutional level, creates a high, then it creates a short-term low, then price actually fails to take out this high. Okay. That failure swing is an indication that price does not want to continue going high. So pretty much what happens is price is moving in an uptrend, okay, creating high highs and higher lows. But then for the first time, price fails to create a higher high, but instead creates a lower high. So it's a failure swing. And then the breaking market structure confirms that reversal. So what happens is price will retrace to premium and then sell off from there. For bullish case or scenarios, the same things apply. Just flip them over. Price comes to an institutional level, creates a low. You have a run of source liquidity, then price. We have a break market structure, retracement back inside into like discount, into a discount array, and then buy from there. For failure swing, price creates a low and a short-term high. Then you have a failure to break that low, and then a break market structure confirming that reversal in price. And then you have a retracement down to discount, and then price buys from there. Now, next we're going to look at some examples. So currently, this is an example from current price action will be okay. So again, the same things. Price creates a high, then creates a low, right? All the while from way back down here, price is creating higher highs and higher lows, right? So it's been bullish. So when it comes to a level where price is gonna reverse from, we're gonna have the last high, or price is gonna create a high and a low as per usual. Then you're gonna have a run on that high there, and a break market structure of the last higher low, or the short-term low that was created in price. Then that thing is price is gonna retrace to premium of this range and then sell off from there. And this was my analysis before all of this happened. Okay, so I'm just gonna show you some examples also from the Telegram channel that I sent there. So this was my analysis before price sold. So I had my eyes on that fair value gap in price to trade back up to that fair value gap. So again, a random buy side liquidity, then a breaking structure, trace to premium, and then sell off from there. Okay, and this was my trade on that daily fair value gap. So I sold from there. Next example, a bullish case, a bullish reversal really. So we have around a sell side liquidity, then a breaking market structure, retracement to a fair value gap, or to discount really, and then price buying from there. So you bought for a really long time, but this is a daily time frame in case you notice. Now if you really zoom in on that area again, you're gonna see that multiple PDRAs in discount. We have a fair value gap here, we break a block, and you also have the other block right here. Now if you understand the liquidity matrix, the breakage takes precedence. Okay, and I took advantage of that reversal as well. See, I was in that trade, bought, price did all met all my the criteria for reversal with a run on south side, breaking market structure, tracement down, then buy from that uh, breaker to outside liquidity daily time frame. And if you zoom in or if you go down a lower time frame, that same place here, okay, the breakout as well with 5 gap. This is what the 4 hour looks like, and this was what my 4 hour trade, or this is what my trade looked like on the 4 hour time frame. And for another example, again, same thing. Just going to be following the same process, right? You will run on buy side liquidity in the break structure. Now it's going to be important that the low that creates the run on liquidity is the one that we want to see being broken through. Okay, because price can create some lows before this low is broken through, like say this one here. If maybe it was created out here, it was broken through. That's not our focus. Our focus is on the last low that was created before we ran liquidity either buy side or sell side liquidity. So run on buy side, then break market structure, retrace to premium, and then price sold from there. Once again, this is the daily time frame, so it's a significant reversal that took place for a really long time. This as another example, you run on sell side, then the break market structure, retracement down to discount. Now I just showed you the reason why this is the area that I've drawn out for you, because it's a lower time frame period here. It's a bearish. I mean, it's a bearish candle on the lower time frame, which I'll show you on the 4 hour. Yeah. So on the 4 hour, you see it's a bullish order block, and I was also a part of this trade as well, where I bought, okay, from here, and you can see that this was a significant reversal in price, right, from a downtrend to an uptrend, and this was around 20 days because this is a daily chart. So price bought exactly where I bought here. We went up for around 20 days. And let's look at another example. Same process. We run buy side, break a structure, trace so, premium array, break a bulk, price sold, daily time frame. Now, to show you that this actually works, okay, in a lot of time frames or across the different time frames, I pay attention that this is now on the hourly time frame, so same process again, but this is the failure swing reversal pattern. So we fail to take out this high and break structure here, trace out to an order block, start from there. Now in any case, this is a mitigation block. Price actually just for some time here, but did not the sell was not extensive, so price still continued tracing back up inside this range, so that order block and finally sold from there. And so this is another trace that I took, but this I'm showing you how it would turn out, or how it would why this reversals actually good places or to be trading. And another example of a failure swing reversal pattern on the 4 time frame here, we failed to take out this low because we've been going downtrend. Okay, so that means lower lows and lower highs, lower lows and lower high. But then for the first time, we fail to create a lower low, right? So it's a failure swing. Then the high that created the failure swing. Okay, it's always pay really attention to that, close attention to that. The high that creates the fallacy, or the high that creates the stop hunt. The low that creates the fallacy, or the low that creates the stop hunt. That breaking structure is what confirms the reversal. And up to price, the level of price retraces, we'll be measuring that range from the low to the high in a discount array, which in this case is an order block, is where price will buy from. So from a downtrend to an uptrend now, and it reached all the way even above this high here. Okay, so this is what it look like. An example on the hourly time frame. So an uptrend, right? High highs and high lows. At this point, we see a reversal. And how does it form? Same process we've been talking about. Price takes out a high and breaking structure. So the low here that created the high is one that's broken through, so that confirms the reversal. So from high then to the lows, we're going to look for a premium array to sell from. In this case, it's this bearish fair value gap and multiple times price or resistance at that fair value gap and sold. So from an uptrend, then reversal to a downtrend. And this is how it looked like. Another example, to get a low, broke structure, retrace back up to that, and then bought from there. And this is how it will turn out. Then another example here, stop hand reversal. So we have a stop hand breaking structure, trace to this kind of array in that, which is this bullish order block, then price bought. So reversal of what? Of the sell, of the bearish order flow, of the downtrend, as you will. So from a downtrend to an uptrend, right? Bearish order flow to bullish order flow. And this is how it will turn out. Another example, this one to be a failure swing, right? So fail to break this low because we're coming down, right? Now we'll fail from the first time to fail to continue going lower, and breaking structure here, she's down to mitigation block and price buys from there. Then another example here. So I'm gonna show you. So I'm showing you so many examples because I want you to realize that this is not actually a random occurrence and something that's actually happens consistently. So excuse me for the multiple examples, but I do hope you don't mind. So we took out the high, broke structure. So the low that created the stop hand, see, is the one that's significant that we want to see being broken through, and price retracing up to a premium of the range, which in this case is this 5 gap, price sold from there. And this is how we turn out. In this example here as well, right? We've been buying, finally created some relatively equal highs, stop on that, break below here, trace of 5 gap, and sell from there. And here's how it will turn out. An example, stop hunt, breaking by the structure, trace of 5 gap, sell from there. Okay. And the last example, the top hunt, break structure, or at least in this particular case, start. If you will not consider this a breaking market structure, because the body is not close below here, you understand that on the lower time frames, there's actually been an actual body close. And if you watch the video on breaking market structure versus market structure shift, I did talk about this, that there's issues of body close and the wick and all that. So go into that video and you'll hear what I have to say about it. And this is how it turned out. Now we're gonna go to the chart. I'm gonna talk about something that's similar to this. Okay, I want you to look at this. So of course we've been buying and then I was selling, so it's an actual reversal. But I want you to see this particular price action because this is an hourly time frame. It's like December, so it's one of the latest. It's the latest price action, right? Like a couple of days ago, I think. But I want you to particularly look at how it formed, the reversal, how it formed. Okay. So I'm going to take you to the chart. I'm going to show you something that's similar here and show you that this thing is actually not only consistent, but it's something that happens regularly. So here, okay, let me show you. See this? We have relatively core highs right there for buy side liquidity, and price runs that the low that create that random buy side liquidity being broken right there, right, that confirms the reversal. Then price comes to an PRA, which is supposed to be like a primary in this range, but in this particular case with this one, a 30 gap, and price sold from there. It's actually very similar to this price action that actually took place like 2 days ago or something. So I'm actually gonna go even deeper and show you something. But before that, let me show you at the time how I actually did see this reversal as it was forming. Okay, so finding the daily favorite gap, the forward favorite gap, this is what we have here. All right, so all that liquidity and breaking market structure, then retrace the favorite gap and see how price sold from that for the favorite gap. Now you're gonna see if we go into the Telegram channel, you see how I had my view on that for favorite gap. All right, breaking market structure. Buy side liquidity swept, then breaking market structure, retrace the favorite gap, and boom, price sells from there. All right. Now, before I close this video off, let me even go deep and show you how you can go as far as framing setups by the reversal patterns. Now, notice that when price went up to run on that buy side liquidity, this is where it peaked before going down, right? So buy side, say a bullish order fall and a bearish order fall from there. Okay, let's dig deeper into that and see. So let's go on lower time frame and show you something there. I think you're really gonna enjoy it. So the same way again, the same process that we've been using, we're gonna use it right here. What we have is where price peaked. Okay, what do you see right there? Buy side liquidity, or last run on buy side liquidity right there. Then the low that created that run is this one, right? Boom. But you're gonna notice before price actually ran this low, it created this bit of short-term low here. Price went up, the rebounds is fairly gap and so. So the thing is, the reversal patterns, these two, the stop and the failure swing, they always go together. What I found is that every time after price creates a stop and it's gonna create a failure swing, because evidently it's supposed to, because it means that price will no longer continue in the outflow that it was in. If it was bullish, after price actually does stop hunts the last high, then it should start looking for lower prices, right? Not higher prices. As a result, after that stop hunt, we're going to be starting to see lower lows and lower highs, right? Failure swing, the first thing. So it's always going to be a stop hunt, then failure swing, stop hunt, and failure swing. And every time where there's like a failure swing, if you really investigate it, you'll likely see that there was a stop hunt prior to that. Now, when we have a case like this, what we're gonna do is, and essentially because the failure thing has kind of rebalanced this leg of price here, where we're gonna find our entry for the stop hunt. Our focus is gonna shift to the failure swing. What do I mean by that? Because this retracement up here has rebalanced everything in this range, so there's nothing in this range for us to use. But now we have a failure swing, and the failure swing low, which is this one, after we broken here. Now we're gonna look for what? Price retrace to the premium of this range. and that's the one that's going to give us an entry, which is what in this case, a favorite gap slash balance price range, and boom, price sold all the way from there to that daily low there. See, a significant reversal in price, right? And it's not by chance. So again, oh yeah, the last thing, if you remember, we have a 4-hour favorite gap right here. Okay, so let's do the same thing that we did here on the lower time frames as here and see the entry that could be framed from that 4-hour favorite gap. I'm just gonna go down till maybe 15 minutes. Okay, so what happened here on the 15 minutes? We had high highs and all that, right? Really sort of full until finally price fails to take out this high. So it's a failure swing. And with the failure swing low, it's this one here. And it's broken. The structure is broken here. So confirmation of reversal from the 4-hour failure gap, right? And retracement up to premium, which will be this order block. And that will be your entry. And as you've seen, ladies and gents, this was like a hard time from retracement, and this is where it reversed exactly right there. And that sell was something. So I hope this was insightful, and until the next video, cheers.